Sunday, May 22nd, 2016. A short video on technical analysis. I know a lot of people think technical analysis doesn't work. I've always been a close follower of technical analysis. I've done courses on technical analysis, but I also like the fundamentals. I think it's important to follow both. But it's really important that I come out with this because we've had a death cross on the weekly chart of the S&P 500, also in the Dow, but I'm going to focus on the S&P 500 because that's the broader market. And moving averages basically confirm tops or bottoms, so they happen after the top. And this makes sense because we had the top in the stock market last year, and 50-week and 100-week is long term, you know. So, and it takes a while for these things to evolve. But as you can see by this chart, we crossed about 2 weeks ago, and we're definitely below now. The 50-week moving average is below the 100-week moving average. 50-week is the gray line, and the 100-week is the red line. And you can see that the 50-week now, which is just above 2020 in the S&P, is kind of acting as support. So that's the key level there, just above 2000, that we need to keep an eye on. Once also we move below those two lines, that's even, you know, more confirmation of a top. And as you can see as well, we've closed above that at 2053. And now I move on to why this is really dangerous. And I do have to say, I'm not saying the stock market crash is going to happen, but there is a possibility. So I'll go back to, you know, the beginning of this century, because this is only the third time this has happened in the S&P 500. And as you can see by the chart here, the death cross number 1 happened in 2001, just beginning of the year there. And the top was made, of course, in 2000, but it confirmed the top. And after that, the S&P plummeted down towards 800 by the end of 2002. And then the second death cross came in 2008, and it confirmed the top of the stock market in 2007. And look at the move, how quickly the market went down, you know, to, I think it was around 660 or something in the S&P in 2009. And that was a quick, that was a almost a, well, it was a crash. And then now, as you can see, we've got death cross number 3. And in my opinion, it's confirming the top from last year in May 2015. And, you know, if you extrapolate how quickly the first crash took, you know, evolved, you know, it took about, you know, over a year. And the previous crash in 08 took about 9 months, you know. We could see a very, very big move down in the stock market. It kind of plays, confirms, you know, maybe what Bo Pony has been saying, that we're not going to get a crash, we're going to get a collapse. And as you can see from this long-term chart, the lows are getting lower. The highs getting well, the second high was slightly higher, I guess, than the first high, but this high we've had in the S&P was way higher than the second death cross. So it could be epic, this you know, move. And as I'm saying, this is just confirming the top. I'm not saying we're going to crash right away, but there is a big possibility. So in my opinion, death cross number 3 is hanging over the market, and it's a very dangerous indicator. We'll have to wait and see. It probably, if it is going to happen, I think it will happen before the end of this year. So with that, please, give me a thumbs up if you like this video. Also subscribe if you haven't yet, and also share it with friends, families, colleagues, anyone you think would like to have a look at this. Thank you. Have a good Sunday. Bye.